Trading can be overwhelming, especially when you're just starting out. There's a seemingly infinite amount of information, courses, and mentors online that it's hard to know what to trust and what information is actually going to benefit you. Now, fortunately for me, I had a mentor that actually introduced me to the trading space. So he was able to direct me to the right information and kind of help me get to the other side of that learning curve. But regardless of this, there were a lot of things that I had to learn myself along the way that just weren't told to me. Now, I know that a lot of people don't actually have the privilege of having a mentor or someone that they can lean on when they first start trading. And therefore, I'm going to be sharing them lessons with you today. Now, these lessons will actually cut a huge amount of time between where you are now and being a profitable trader. Now, I know this because I know that if I had followed these things and utilized them, I probably would have become profitable maybe a year and a half earlier. So I could have saved a year and a half. And essentially, I wasted a year and a half because I was just making mistakes and not going about it in the right way. Now, before we get into it, a quick plug. I have a couple of free resources that I'm going to go and link in the description below. There's an ebook and there's also a weekly Outlook recording, which I drop every single week to my free Discord. So yeah, make sure you go check that out. Let's get right into it. Rule number one, journal everything. Now, I know some people don't like this because they feel like they can memorize every single trade that they ever take and somehow they don't need to learn anything from their mistakes. Okay, but it's not true. Journaling is essential for your growth. Now, I don't care how good your memory is or how good you think your memory is, you have to journal everything, all the trades that you make. I cannot begin to describe the amount of time that I've wasted simply by not journaling because it means that you take the same trades and make the same mistakes over and over and over again because there's no self reflection, there's no accountability, right? The moment I started to journal all my trades was the moment that my progress went from that to that. It was exponential growth simply because I'm now holding myself accountable and I'm able to actually recognize the mistakes that I make, right? Because trading is simply just pattern recognition, right? And if you're not writing down the patterns of your trading, then how are you ever going to recognize them? It doesn't make any sense. So make sure that you're journaling everything. It's not only the trades that you take that you need to be journaling. It's the trades that you miss. It's the trades that, you haven't got enough back testing behind you in order to implement them yet. It's the trades where maybe you don't see a potential setup, but you like how price delivered, you think it moved clean. They're the types of things that you want to note down as well. Now, it all matters because as a trader, you should constantly be improving and trying to upgrade your strategy or just refine your model, right? Which requires you to collect data. Okay, so you should be collecting as much data as you possibly can. Now, this brings me very nicely into rule number two, and that is do your own back testing. It's all well and good knowing other traders in the space, but when it comes to your back testing and your data collection and your pattern recognition, you have to do it as independently as possible. Now, what do I mean by this? Right, so if your trader friend or someone that you know that trades comes to you and they tell you, hey, bro, like I've got this strategy, it's 80% win rate. I've back tested it, whatever, yeah, blah, blah, blah. And you just take it and you go and try and implement it in the live markets without doing any back testing to back that up, you're doing yourself a disservice and more than likely you're going to lose money. Now, first of all, you don't know if this strategy actually does work. The person that you got it from may not have actually back tested it. It may not be as profitable as they say it is. Yeah. And you have no data to back it up, right? So you shouldn't be trusting a strategy that you have no data on. Full stop. Any strategy that you want to apply in the markets, you need the data to back it up. Now, secondly, even if that strategy is profitable, you have no experience trading it. You haven't got any data on it at all, right? And not only does data provide proof, but it also provides you with confidence, right? When you go into the markets, the more confident you are in your model, the better. Okay, and by collecting your own data on a certain strategy, a certain entry model, you're going to build up confidence and you're going to be executing with complete confidence and you're going to be calm in the markets, you're just going to perform better. So without doing your own back testing, you're going into the markets blind. Now, what I would recommend you do is you go, you find examples, you journal them, you forward test in the live markets without placing trades, right? And you collect data, you find the win rate, you find the variables, different strategies you might have to tweak for different market conditions until, you have a good idea of how you can use that strategy within the markets. and then you move from there. Now, these 2 points and 2 lessons that I've just mentioned require you to journal, both of them, okay? And a really good journaling software that I personally use is called Notion. Yeah, I recommend that you do it. It's very customizable. You can make your own templates. It's yeah, it's great. That's what I would personally recommend. Now, rule number 3, don't rush into prop firms. Now, I know that in the Forex space, there's a lot of hype around prop firms, people getting funding, getting max funding, getting on the leaderboards. It's like a big trophy that every trader seems to want to achieve. Now, these prop firms are a great source of capital and can increase your leverage drastically to make, more profits than you would be able to with your initial investment. But this only makes sense to do once you're profitable. Now, until then, any new trader that goes into challenges, even if you don't get a challenge and you just buy instant funding, you're going to lose it, right? So your goal has gone from, trying to increase your capital to now the result is you're just losing money. Okay, so it doesn't make sense to even look at a prop firm unless you know that you're consistently profitable. Now, I've made this mistake. A couple years ago, before I was profitable, I was buying challenges. Well, I must have wasted like a couple £1,000 at least, yeah, just on challenges because, I was thinking, oh, maybe it'll be this time, maybe it'll be this time. But it's like, if you don't know that you're profitable, you're just losing money. And that simply is the mind of a gambler. That's something you have to switch from. You have to go from a mind of a gambler to someone that thinks in probabilities and a professional, someone that thinks of trading as a business. Now, what I think, obviously, as I've said, a better game plan would be to get profitable before you even go into prop firms, right? But if you are itching to trade live funds, and I understand this because there's a different mindset, right, from where you're trading demo to trading live, okay? And for some traders, that's necessary for them to actually build up their mindset, right? So live funds, I fully understand. But go and put that money into a small personal account, okay? Because let's say, for example, let's say you have $1,000, £1,000, yeah, and you go and put that money into a challenge. So you get a 200K challenge. Now, if you take a 10% drawdown, yeah, or even if you lose 5% in a day, okay, you'll blow that challenge. That's that 900 or £1,000 gone, yeah, from a 10% or 5% drawdown. So by losing 5% or 10% on your 900 or £1,000 investment, okay, you've lost the whole £1,000. Whereas if you was to go and put that money into a live trading account, okay, if you go into 5% drawdown or 10% drawdown, you're not going to lose the whole account. Yeah, you're going to, fair enough, you're going to lose 5 or 10% of your equity. Yeah, but you should understand that you should be willing to lose this money anyway. But it gives you a lot more equity to play with than if you was to go slap it into a challenge and then you give yourself a tiny little margin of 5% a day. Okay, now as a trader, once you're profitable, you understand that 5% a day is more than enough. But I know for beginner traders, it's very easy to get in these losing streaks. Okay, so as you're developing, you shouldn't be touching prop firms. And if you're going to trade live funds, just put in a small account that you're willing to lose. So ultimately, prop firms are designed for you to lose, especially new traders. It's a shiny object that you think that you're going to be able to achieve within your first 6 months or first year, which is kind of unrealistic. Instead, you should be focusing on profitability. Now, rule number 4, stick to one strategy. Now, by all means, when you first start your trading journey at the very beginning, you're going to want to go out, explore different strategies, try and figure out which ones kind of suit your personality the best. But now, once you've found that strategy, you need to stick to it like glue. I'm telling you, you will take countless losses, you'll feel like the strategy's not working, but I'm telling you, it is not the strategy, it is you. You're the one that needs to improve, okay? The strategy's fine. What you're lacking is experience in the markets, nothing else. Now, I know this because I have gone through probably at least 5 strategies where I've, tried it out and maybe I didn't get the results that I wanted. So then I switched strategies thinking, okay, cool, this one's better. There was one time I was trading, going for high risk to reward trades. Then there was one where it was like a breakout strategy. Then there was one where it was I can't remember where it was. It was like a retracement strategy. So I'm going off of like retracement trades, and I couldn't get them to work. But the issue wasn't the strategy, because all the strategies that you can probably think of can be made to work with right testing and the right experience. What you lack is experience, because now all I have is a simple intraday total suit model. That's what I trade. But I'm confident that I could go back now with my experience, and I could make all them strategies that I once traded. I could make them work. Okay, so you just need to find one strategy and stick to it and get your experience, and it will work out for you. You have to remember there's not just one way to trade the markets. You know, if you think of any strategy, there is a trader that is profitable with that strategy. So it's not the strategy that is the issue, it is the trader. So rule number 5, higher time frame is key. Now I cannot stress how important this one actually is. When you're trading and you have a higher time frame bias, this is what actually puts you on the right side of the probabilities. The daily, the weekly, and the monthly are what have the most influence over the markets. Everything else on the intraday is just a moving part within that framework. So in order to create the highest probable scenario for yourself, you should really want to get in line with that. Now, I believe that this is the foundation of a profitable trader, right? Because there are hundreds of strategies that work off the intraday, aiming to catch, for example, the daily range, or aiming to catch, the weekly range, right? But if you don't have a higher time frame on your side, yeah, it doesn't matter what you do on the intraday. You could have 100 different strategies, yeah. Not one of them will work at catching a daily range if you get the daily bias wrong. But once you have that daily bias down, your intraday strategy could be the most mediocre thing. If you're trying to catch the daily range and you get the daily bias right and you position yourself, you're going to make money regardless of what your intraday strategy is. Now, a testament to this is one ICT strategy. I believe that he spoke about it in it must have been the core concepts, right? And it's literally where you understand the daily bias, right? You know your higher time frame perspective, and you have a good idea of where the day is going to expand. Okay. And then you ignore anything on the intraday and you literally buy at midnight. I think it's GMT. Yeah, you buy at midnight GMT, okay? And you just set your TP, I think it was like 50 pips one way, and your stop loss 50 pips the other way, right? Or to catch like a 1-to-1 or something. Yeah, and it's a profitable model. So there, you're not even taking into consideration the intraday, because you're simply relying on that power of the higher time frame. It's for this very reason that I prioritize putting together a crash course that teaches daily bias and shows you how I predict my higher time frame movements throughout the weeks and throughout the months, and then call it out to my higher time frame predictions channel. Now, I not only provide the technicals, but I also provide the process that you should follow in order to get results out of the course. Because there's nothing worse than maybe watching somebody's course and then you kind of don't know what to do with the information, you don't know how to apply it. So I have a process within there that will show you exactly how to maximize your results. Now, I'm so confident in this crash course that I've put together that I guarantee that anybody that goes through it and follows the process that I provide will increase their higher time frame skills massively and their daily bias skills massively. So yeah, if you want access to that, just go into the description below and I've left the link there. Now, I hope that you found value in this video. This is 5 lessons that I wish I knew, or 5 rules that I wish I knew before I started trading, to save a ton of time.